Hello and welcome back to Ben Talks Money. My name is Ben. I have an MBA in finance and management, and I have been trading for the past 8 years. If you are new here, please subscribe to the channel, like the video. If it's helpful to you, share, tell a friend to tell a friend. So in today's episode of Stock Review, we will take a look at Chipotle stock. We would look at why the stock is down 35%, and we will take a look at why the stock is set for possibly a huge rebound. We will take a look at a snapshot of their fundamentals, and then we will analyze the daily chart to see where we can get in for a possible swing or long-term investment. So let's get started. Chipotle stock is down 35% this year for multiple reasons. One of them is inflation. Because of high inflation, consumers are carrying on spending. Chipotle is not the only stock that is being affected by this. There's a lot of companies in this sector, the retail sector, and the restaurant business that are suffering from high inflation because consumers are cutting on costs. The other reason why the stock is down 35% is also competition. There's competition from Kava, there's competition from Taco Bell that are taking market share from Chipotle. Another reason why the stock is down is rising costs. Because of inflation, the overhead costs for companies are higher, and so it affects their profit margins. And when they report their earnings, Wall Street doesn't want to see that. Those are the reasons why the stock is down 35% this year. So let's take a look at upcoming events that can help move the stock much higher. And that's the reason why we are all here. The first is that they issue a $500 million buyback program, meaning that they're going to buy $500 million worth of the stock. It's going to prop the stock up. The stock is going to move up. The second thing that is going to help the stock move up is interest rate cut. The Feds are expected to cut interest rate Wednesday, and it becomes easy to save when interest rates are down. So stuff like this helps people to have extra cash for them to be able to eat outside on restaurants like Chipotle. The other thing is the back to office campaign. Majority of the tech companies are mandating their workers to be back to the office later this year and beginning next year. So the more people that go to the office, the more people that goes out to eat during lunchtime. So these are the things that are going to help Chipotle stock turn around. And if we take a look at a snapshot of their fundamentals, you can see that their revenue for 2024 was about 11.3 billion. Their revenue grew about 14%. So with a company that is growing revenue at 14%, it's still a profitable company. And their operating margins was around 26%. If you are running a business that your margins are 26%, it's lucrative. And it also shows that even though because of inflation, operating cost is higher, the company is still profitable. They still have a healthy margin. The stock market is really hot, and it's just a matter of time before an activist investor comes in and buy a huge bunch of the shares, and then there will be a short squeeze and you'll miss out. It's ideal to get in now when the stock is down 35%. Let's take a look at the daily chart to see where we can get in for a possible short-term or long-term investment. If you look at the daily chart here, you can see that CMG, Chipotle, it held a support. The support is around 38, 38.50, 38.54. It held that support and it pushed up above it. Right now, it's currently trading around $39. That's where it's trading. So it's about 50 cents above the support level. If you're looking for a swing trade, you can use that as where you get out. You get in at 39, you are risking 50 cents. And if this stock breaks $40, usually round numbers are psychological support and resistance. So it might have some difficulty when it gets around $40. But even there, you are buying at 39.15. And if it gets to $40, you are risking 50 cents. So that's about 2-to-1 profit risk ratio, which is still good. But if this stock break above $40, it has a lot of room to go. It's down 35%, right? So from there, the next resistance zone will be around $45, $44. If you look at it on the daily chart, you can see right here. This area is the same area here. So that will be the next level. And after that, we have room to go. Right now, that $34, $35 is also the 50-day SMA. So it coincides with the 50-day SMA. So that might be a little bit of a resistance there. But if we break from there, if we're able to break and hold about 45, we go right up here to $48. This zone will be around $48. And from there, 48.50. So it has a lot of room to go on the daily chart if it's able to hold above 39. And even if it pulls back a little bit to 38.50, if it's able to test that support level and hold, it's a good entry point. So if you are doing a swing trade or long-term investment, usually I do dollar cost averaging. If you are investing for the long term, then dollar cost averaging is ideal for you. So that's the play. Entry around 39. If it pulls back to 38.50, that's the support level. If it holds the support, it's also an entry point. But if it breaks below 38.50, the next support will be around $35, $36. That's it for the stock analysis for Chipotle. If you have any question, leave in the comment section below. If there's any stock that you want me to take a look at, you can also leave in the comment section below. And if you are new here, subscribe to the channel. We do a lot of this kind of stock analysis that will help you, give you clarity on the direction, the possible direction of the stock. So if you are new here, subscribe to the channel, like, share, tell a friend to tell a friend. And until next time, let's keep talking money.